I'm going to explain why I believe it is so important that you need to get the fundamental basics correct in order to be a good trader. Let's talk about that and more right now. Hey Forex traders, Andrew Mitchem here, the Forex Trading Coach, video and podcast number 330. And you notice I'm wearing a jumper, a sweater, back here in New Zealand in the middle of winter after 3 weeks over in Europe. And if you've been following me over the last 3 or 4 weeks, you'd have been noticing that I've been overseas traveling around and I've been really focusing on the basics. And in that time, I've been trading just the monthly, weekly and daily charts and nothing else. And you'd have seen that we've made some exceptional gains, including last week, which was my first week back at home. We had made, with only 0.25% risk per trade, 12.79%. That's all trades that were posted on our membership site. And realistically, although I called it a 30-minute a day trip, most of the time it was sort of 10 minutes a day. And just this week, it's now Friday, I still have some open trades open that are at 0.9%, so almost a 1% gain on open trades that are open just today. But this week already, we've had closed trades of another 6.55%. Again, just using monthly, weekly, daily charts and a breakout strategy that we use once a week. Again, 10, 20 minutes once a day, and that's it. So, not only did I want to share with you those results, which I believe are very outstanding and excellent results, also to let you know, of course, they were on the membership site. But the important thing is, yes, the results are wonderful, but it's more important to understand that we do this by trading the basics, the fundamental basics. And I don't mean fundamental as in news announcements and worrying about what's happening politically around the world. I don't mean that fundamental. I mean fundamental basics as in getting everything correct, the basics, the building blocks, the foundations of trading. But you must remember that we've been doing this for a long, long time. And so it's a bit like riding a bicycle. You know, after a while it becomes almost like second nature. However, we don't deviate from the basics with our trading, and that we have a strategy that we know and we understand, and that's very low time consuming for us to trade. It's very easy to identify a trade and go, yes, it's a trade, or no, it's not. And that's what I mean by the basics. You've got to have an understanding of the price action if you want to become a technical trader. We use candle shapes, candle patterns, and it's very easy to look at your charts, but in real time. It's no good having a strategy or a system that you can make a fortune for or from it, but with hindsight, after you see what's already happened. You've got to be able to do it from the right-hand side of the chart. And you'd have heard me talking about that many, many, many times, about the profitable trader is the one that can trade from the right-hand side of the chart and decide what's happening. But you don't need to also sit there glued to your screens all day long watching line A crossover line B and all those things. You know, that's just not good trading, in my opinion. You need to be able to wait for the close of a candle, see a setup and go, yes, it's a trade, or no, it's not. But it still comes back to basics a little bit further. And that once you've identified that, where's your stop loss going? Where's your profit target going? We have that as set levels that we use on our trades, that it's all in relation to the current movement and volatility of the market and the currency pair at that time. It's also important that you control your risk. So those trade results that I've mentioned have been taking place with only 0.25% risk per trade, so 0.25% of our account. Very, very low risk. That means, as an example, a $10,000 account, we're risking only $25 on each individual trade. Now, when we place our daily trades, we're risking $50, but we split it into 2 positions, $25 each per $10,000. Very, very, very low risk. And you put those two together, you know, that's I've got them in front of me here. It's 12.79 and 655. That's around 19.5% or something like that in the last 5 weeks, but with very low risk. And that's the important things there. It's also important that we don't worry about the number of pips we've made. I just never talk about how many pips were made because it's irrelevant. It does not matter. I cannot go and buy something from the local shop with pips. But if I've made 19%, in the last 5 weeks on a $10,000 account, let's say, I know that's $1,900, and I can go and spend that. And so you see the difference there. And of course, that's with that low risk, but you can, of course, risk higher if you wanted to. Now, leading on from that, reward to risk is another crucial part of trading. And so I'm just repeating what I've repeated for 10, 11 years on these videos and podcasts. It's nothing new, but it's important that you put all this together and consistently achieve this. High reward to risk trades. It's no good in having a 90% win rate if your one losing trade loses more than your previous 9 winning trades. So that's pointless. You have to have high reward to risk. Controlled, low risk. If a trade ends up being profitable, it's a very highly profitable trade. So all those things put together. And the reason I wanted to come back to that is because the last, the 3 weeks when I was in Europe and the last couple of weeks since I've been home, it's kind of reiterated the importance of that get back to basics philosophy. Because it also shows, and the results are there, to prove it, that if you do have the basic foundations within your trading, the results are there. And don't forget that July and August are traditionally very hard months to trade because of the Northern Hemisphere summer holiday season. So we've done this in what traditionally has been quite a difficult time. Don't forget, if you think about the world right now and politically and the events that are happening, a lot of turmoil going on, yet we've still achieved these results with low risk. So that's what I mean. Come back to basics. Put all this together, be consistent with your trading, almost be boring with your trading. It doesn't sound flash, it doesn't sound all razzmatazzy and flash cars driving around and sitting on a beach like you see, unfortunately, like 99% of all Forex websites out there. The reality is that we are here at home doing the real trading, and for those weeks while I was away, you could see them all those trades there. So hope that helps. A little bit different this week, but very, very important nonetheless to get the basics right, build those foundations up, just like you would if you're doing anything else. If you want to do anything else correctly, that is. If you'd like our help, you know where to find us. We're at theforextradingcoach.com, and I'll see you this time next week. Bye for now.